Ladies and gentlemen, welcome to yet another video, and I would like to state that I would have put this video out a long time ago, but I don't know, just have this glitch problem where my video seems to be lagging. I've taken like different recordings and it's still like when the market was all the way at this point, it's just been lagging, and I'm finally trying to see if this video is going to come out clean the way it should. Now, this is the previous structure, as most of you know. Most of you that have been with me for a long time. I put out a video explaining when the market broke the structure to the downside. And I think since I started trading in general on the daily time frame, this has been like, I think my third or fourth breaker structure since I started trading. And on the daily time frame, this is like my third or fourth breaker structure on the daily time frame. Now, ladies and gentlemen, I've also had to change your character on the daily time frame too. Now, ladies and gentlemen, we are therefore, because it closed with a candle close below the breaker structure line, we are therefore looking to map new structure. Remember, the moment structure is broken, the very first thing that happens is the new breaker structure, the new change of character line gets confirmed at this point. This is therefore our new change of character line. It shifts to the highest point it went to in the structure before structure was broken. It was the opposite, like the downtrend would have been the lowest point it went to before. In an uptrend, actually, it'd be like the lowest point it went to before structure was broken to the upside. But ladies and gentlemen, this is what we have now, and I'm going to try to explain what a single candle order block is using this. There's this guy, shout out to him, Mario, I think. He's always, showing love, support, and always, trying to get to learn better. And he's been asking me what those little boxes I've been using to enter my trades from, what they are, why they exist, what they're for. Well, Mario, this is me telling you and everyone else who wants to learn what a single candle order block is, why the single candle order block exists, how to use it, and how to execute it perfectly. Now we have that we've made a change of character to the downside right now. The very next thing we want to do is map new structures. And structures are not possible to map without first mapping pullbacks. Ladies and gentlemen, let's go into mapping pullbacks. I'm not going to start all the way from the top of the structure to map it. Now, what's most important when mapping pullbacks is where the last pullback was taken. And as we can see, those of you who don't know how to map pullbacks, please, you gotta learn. This is a push down, push up, definitely a pullback. A pullback is when the candle, it's like in a flow. You can see all of this one. Next candle proceeds, next candle proceeds. None of the candles went up to take the previous candle's high. Then this candle's series of candles go up to take this previous candle's high, and then return back into the down flow, which is supposed to go. So that is a pullback. Pullback. That's what a pullback number one. And then it comes up to take that pullback liquidity. That pullback's liquidity is called an inducement. Last pullback's liquidity. Now, this candle wig took the inducement. It did not close with a candle above the inducement. It closed below the inducement. So just took the inducement with a wick. Now that candle alone doesn't tell us if we should buy or sell. This is the information that particular candle gives us. But what we want to see, in order to make this candle a single candle order block, we want to see the next candle right after this one close below it, because it's a downtrend. Yeah, if this was an uptrend, we'd want to see it will be the inverse of this, and we'll be expecting it to close above, but now we want to see it close below this candle. Say the next candle close below it with a full body, not with a wick, with a body. Ladies and gentlemen, let's look into that. Now we see the sweep of the inducement. The next candle does not close below this candle with a full body, but with a wick as well, sweeping the liquidity from that candle, therefore shifting the liquidity to this candle. Remember, this candle was relevant because it took the liquidity and was the highest, and now we see the next candle taking the liquidity from that candle. What we want to see now is a candle close below this one, and that happens exactly on the very next candle. It's a candle close below, and we can see it. Small space, but very vivid, we can see. So what we want to do right now is map out that candle that now has the liquidity. This candle now has the liquidity. We mapped it out, and then open a short position the moment that single candle order block is mitigated. That's the whole point of it. And we place our stop loss directly a little bit above the single candle order block, and we target a 1:4. Let's see what a 1:4 would look like. A 1:4 could make it lesser. Beautiful. And we've seen that beautiful trade play out. But then again, you could also keep your take profit, your right here at the breaker structure line, and whatever external liquidity was available, you probably would not grab that, but and it's beautiful to just take your profits. The market isn't yours, the market isn't mine, it's for everybody. Things like that happen. So now you have it beautifully here that if you were trading on the daily time frame, you would have caught this trade using the principles of a single candle order block. Now let me explain one more thing. When you did this massive push down here, you should close partials. See, if your stop loss was here, if your take profit was here, then you're really close to being stopped out already. Now, if your take profit is here, on the other hand, you still got a little bit of a way to go, but that means you got a close profit. Either move it to break even or move it to half, whatever it is you wanted to move it to. Just make sure you do that and plan for your next trade. So that would have been trade number one, being brought possible on the daily time frame by single candle order block. Previous high point becomes your change of character line, your chalk line. Now, with your chalk line being, you know exactly where your chalk line is. Let's just name it that so we don't get, so people don't be asking what line is that. So that, think of it like your high point, yeah? Next thing we want to do is discover our next structure, which means we've got a map pullback. So pullback number one, all the way, pullback number one, see the flow, then the pullback. Pullback number two. This green candle came lower than this red candle, so yes, this candle now went higher than this green candle. So pullback number one, pullback number two, pullback number three, and then it comes back up to take pullback number three. Note, it could have taken pullbacks number two with these candles up here. If it had, we would have still mapped this as our low, that the taking of inducement. It could make many more pullbacks. It could make just two or three, it could make one, whatever. We just got to follow our rules. That's what we're here for. We're not here to make the market look stylish or anything. So the inducement was grabbed around this point by this long candle wick. Now, beautiful thing, I'm kind of glad it happened like that, so I can show you something. Now, what is the difference between that candle wick that grabbed this inducement and this candle wick that grabbed this inducement? Simple. The next candle went below it, just like this one, did not close with a body. The next candle went all the way back up and closed above the candle that took the inducement. So we have a candle close above the inducement, which means we're expecting one of two things. Locate a POI in which the market is going to, sell from. That's what we want to do. For this, we have to go back to our regular rules, seeking and confirming a POI. Now, this is a valid pullback and the last selling momentum, the last buying momentum before the sell, which means this is an order flow. But this order flow has been mitigated. A very minor mitigation, but still a mitigation. So we wouldn't want to trust it that much. Only valid POI is this order block right here. Now we'll drag it all the way to there. We got our order block right there. Now we have our order block, and like I said, a single candle order block can also be formed from a mitigation of a POI. POI mitigated. The next thing you see, it's a really long candle taking all the liquidity inside of it, and boom, the next candle closes below it. Therefore, that guy is always saying the box again, the little box again, then with the little box. Yes, the little box is back, and this is what the little box means. The little box means we have located our single candle order block because again, POI mitigated, the next candle closes below the candle that went the highest, ladies and gentlemen. Mitigation right there. It took this is the candle that took the liquidity from the order block. Then this candle took this candle's liquidity, holding all the liquidity in it. Then the next candle closes below it with a full body. So therefore, if we were selling from the daily time frame, we would put open a short position the moment that single candle order block is mitigated. That's the whole point of it. And we place our stop loss directly a little bit above the single candle order block, and we target a 1:4. Let's see what a 1:4 would look like. A 1:4 could make it lesser. Beautiful. And we've seen that beautiful inducement gets taken, the low gets confirmed, so never forget to map out your low. And this is current data, by the way. This is where the market is at. It's a Wednesday, and